everyone. Welcome to the fourth installation of Money Problems, brought to by the Spark of Hudson. I'm Kianga Daverington, and we've been over the past 4 months, monthly, talking about the future of money, thinking about maybe money in a new way and our economy and macroeconomic issues, political issues, local economy issues. And it's been, I think, a really interesting time to be able to gather around some of these topics. And, if you've been with us for the series, I've presented some slides on Bitcoin and other themes of, central banking in your pocket, kind of what the promise or the potential of the Bitcoin blockchain and other related technologies might be, thinking about currency debasement and potentially concerns around what Federal Reserve policies, what some of the investing themes are around why crypto assets are interesting, but also the potential for each of us individually and potentially locally as a community to learn to save new modes of technological change that actually can perhaps solve some business problems. Other money problems, I think the potential for UBI using this type of technology, as well as supply chain dynamics within local farming. And I think I've had, different conversations with each of you, many of you who've been on this series. And so it's really been really a lot of fun. So I thank you for participating. Today, really I wanted and hoped that we could have an open discussion of anything that's on your mind. I have a few slides, so I'd like to share my screen and just, kind of add some humor as maybe it's a touch point for what we will talk about. It's saying that participant screen sharing is disabled. I don't know if we can change that setting. But auspiciously, Bitcoin hit on new all-time highs today. And tomorrow, a very significant player in the space, Coinbase, that some of you may use if you've decided or if you've been purchasing cryptocurrency, is listing publicly, is having its public offering. So that's been a big conversation in the financial media. And I think it's the first time that the markets have begun to see the inside workings of a Bitcoin business, a Bitcoin native, blockchain native business. And probably this event will mark a shift in how the traditional markets and traditional investors really view this space. And there'll be more opportunities to participate in, sort of by buying maybe Coinbase shares as a proxy for the space. So it's really, continues to be an interesting year for digital currency. And if you follow me on Instagram, okay, I'm going to share my screen now. If you follow me on Instagram, I posted a Time magazine cover that says is fiat dead? I think. Okay, let me show a couple of slides here. So, I don't know if you all have my same sense of humor about some of these things, but this cat meme, I just thought was hilarious. So, as I mentioned in other seminars, I collect internet memes. If I come across them, I just save them to my phone. And so I was able to come up with a few for our final swan song here. And I just love this meme. I think it's funny. And I think it kind of speaks to the struggle that's real right now of saving and the earnestness. This just struck me as so earnest, the feeling that we have about, trying to put extra pennies together. And that's in kind of stark contrast to, I think, the narrative around, is fiat dead, and why would fiat be dead? It's being dropped from the sky, but that's part of the paradox of maybe this moment. And Alex, you shared a really interesting article with me that I thought from, I guess, the New York Magazine really brilliantly talked about how bizarre and confusing the idea of money has become, partially, I think seeing how easily money's been distributed in a crisis has raised some questions about, well, why couldn't we maybe have had access to additional resources prior to the crisis? Or, maybe it's raised some questions about, what the purchasing power of that money might be in the future. And this is in the backdrop of talks about a digital currency for the dollar. And Chairman Powell was on 60 Minutes over the weekend. If any of you missed that, there are clips on the internet, and he answered questions about where the Federal Reserve stands in terms of creating a digital dollar. There have been reports about what China's doing with their digital currency. And one of the interesting features that Bitcoiners and crypto people have really focused in on is that the money is being programmed with an expiration date. Sort of like, what's that about? So you ask, like, why would we need a central bank digital currency of a blockchain flavor when we already have most of our money is in fact digital? Well, from a monetary perspective, money that has an expiration date would be a lever that authorities could use to stimulate spending. So if you have digital dollars deposited in your account that are going to disappear at a certain date, you might be inclined to spend them. So there's some interesting implications, perhaps, and who will benefit versus what some of the difficulties might be, depending on how policy shapes out in the future. So with that as a backdrop, obviously these memes are everywhere. I don't know if all of you have seen the laser eyes or wonder what that's all about. Crypto people changing their profiles, and it's really to symbolize, like, kind of, we're super focused on Bitcoin hitting $100,000. And what I hope comes through as I talk about Bitcoin and cryptocurrency, and I like to have a lot of fun, and it's always nice when number goes up, but really is this ethos of savings and stacking sats. So Satoshis, we've talked about, are the units of a Bitcoin. Each Bitcoin is divisible to 8 decimal places, and there are a million Satoshis in each Bitcoin. So really there's something for everyone here in terms of, I think, engaging and participating. It's not like you have to have, what is it, $63,000 as of today to buy a whole Bitcoin, but you can really think about the space in terms of Satoshis and stacking Satoshis. And that's kind of the mantra of Bitcoiners, is to save in a form of hard money, a scarce digital commodity that has an alternative mechanism for how it operates and how it comes into being. And that perhaps with the question of is fiat dead, it's worth at least learning about. That's definitely, if I have one takeaway message from all of this, is to not be this guy, not be the old man that yells at Bitcoin. And this is this is just like, a classic meme every time you have a lot of naysayers in the marketplace that are skeptics, even as adoption continues to surge. And you're seeing more and more institutions offering it as a product, regulation coming in line. So what has been interesting as a financial asset, this is also, if you've gotten involved either in the course of this program or prior, this meme might resonate, being up late at night, checking Blockfolio, or wondering. I have to say, in this cycle, Bitcoin and crypto actually really have not been as volatile in other cycles, although, we may still yet have some time to go. So this volatility, is important to keep in mind in terms of what it really means from now, even going into the future, even at 63,000. And I'm certainly anticipating that we're not at the top of this particular cycle, And we've seen booms in, I wouldn't even say busts as much as I would say corrections significantly, 80%, 90% drawdowns. But over the past 12 years, always sort of concludes at a higher level than where it starts. And unlike most financial bubbles or your typical idea of a bubble, Bitcoin and crypto markets have been unusual, and they keep coming back. They keep coming back. So rumors of Bitcoin's death have been greatly exaggerated, obviously. And I just love this depiction of what it really feels like once you become part of this cadre of renegades with currency, and holding on to it is it feels really nice when the past couple of weeks, but and in this last bit where it's like, oh, and you make it through all of the bear markets, it seems like, oh wow, you were really lucky, and it was all so easy. So this is another fun meme of, actually psychologically, for an asset like this that, can, not just Bitcoin, but all of the digital assets, and, NFTs have been in the news, obviously, a lot, with eye-popping numbers. The emotions that can take over around making money quickly versus on the way down, really can surprise, I think, people as they're getting involved in this space for the first time. And so, my recommendation, of course, is learn and develop your own plan and scaling. So, classic advice: never risk more than you can afford to lose. Not that anyone really can afford to necessarily lose anything, but what is an amount that is not going to have you like this, worried about overnight. Definitely, I do not advise putting money into these markets, and this includes stock markets right now. I mean, the equity markets have been unbelievable as well. Thinking, seeing that it went, up 100% or 200% over some short period of time, and thinking, oh, well, maybe this is an easy way for me to, get that extra, whatever the dollar amount is, in 2 months or 3 months, because it's like this weird psychology that often, just when you think, that it's going to go up and you buy, is often like when it exactly goes down. I don't know how the markets know that, but to have been one of those people that bought Bitcoin in 2012 or 2015, or whatever date that you might look back and say, oh, I wish I had bought it then, I'd have X amount of money now. It's most likely not the case, because it's very, very psychologically difficult to see your money go down significantly, or to weather the uncertainties. This technology is very, very experimental. It's a risky space. But obviously, I think really, really worth the individual investment. And so you want to be Spider-Man on the, I guess that's the left of your screen. You want to be the one that's researching, and not the person who's just like, following the crowd. So on that note, this is another meme I thought was really, really funny, which is, riding that tension between asking other people for advice and for help, and them saying, do your own research, like maybe I'm saying, and that feeling like extremely difficult to do. But I wanted to kind of end on that note, because one of the things that we're going to hopefully talk about for the rest of this session is, like, what are the solutions, right? So we've talked about the big picture, and there's things that we're all concerned about, but what does this look like practically in each of our lives? And I really just come back to, it's such a personal journey right now, as it's so much up in the air, and every person has a different situation. And I think the opportunities are vast at these moments of extreme disruption, and there's so much information, and the information is absolutely free. This is a space that was like, ruled, and still is, by people who are totally self-taught. So I would just encourage all of you, and I think the fact that we're all together on this call is a testament that we're all students, we're all learning, but not to think that someone else has kind of the right answer where this topic is concerned, like where money is going in the future, what Bitcoin or cryptocurrencies are all about. I think there's still, the more you know, it's like the less you know, the more you think you know. It's like, oh, the more you learn, I should say, then, the less confident. I mean, in many ways, realizing, I think it's just more of like a respect, a healthy respect for, certainly I know my ideas about money, and even this for 4+ years that I've been studying blockchain and digital asset networks. None of us really understands what this is and what it can mean for the future, but I think it's really exciting. And so I think what to do and the solutions depends on your own passion and the things that resonate with you, the things that you are good at, your like superpowers, and that this is like an open, that's the whole point. It's open source, they're distributed, there's no one in charge, or there's not necessarily a boss, and that these are like sandboxes. So with that, I just think I'd love to open it up and see if anyone has any thoughts or comments. Want to talk about anything in particular?
I'm glad you finally explained the laser eyes, because I had no idea what that was. And you even posted like a George Washington portrait that had them, and I didn't know if it meant he was possessed or what, and maybe it's actually both. But no, but I'm curious, kind of with that figure in mind, what is the implication of that? Like, what does it mean for Bitcoin to reach, $100,000? And will that mean, or just more people, kind of the community growing and the buy-in into kind of the principles that underlie technologies like Bitcoin? Is that what it is, or is it something else?
I think
how do we get to 100,000?
Yeah, we could get there pretty rapidly relative to Bitcoin's declining supply. We're seeing a lot of supply that's being removed from exchanges, and this is sort of supply demand dynamics. I think 100K is a round number, so it's a psychological level. So I think that the main reason that that's become a kind of a goal, as it were, is that psychological significance. It has technical significance as well, in terms of where it would probably pause or consolidate or could pull back from a kind of like a charting perspective. But yeah, along with the symbolic nature, it does reflect a certain amount of adoption and staying power in the face of quite a lot of unprecedented, expectations that have been really low of this technology for quite a long time. And the price is also, though, not necessarily a reflection of its quote value. So Bitcoin has no intrinsic value, which sometimes is said as a negative, but in fact that's one of its helpful features as as potentially a commodity, as potentially kind of monetary unit or system, is that a good form of money does not have intrinsic value, because if something has value apart from its utility as a means of exchange, then people might be likely to hoard it or use it for that other value. So in some ways, Bitcoin not having a counterparty risk, not having when I say counterparty risk, I mean that it's a bearer instrument, like whoever holds the private keys has the Bitcoin, and it doesn't depend on a contractual relationship for you to actually access the asset. So it not having intrinsic value and Bitcoin being worth what other people are willing to pay for it, there's an argument to say, well, that could potentially be a stronger form of money than something that's commodity backed or something that's backed by something else. The question is, of course, what other people are willing to pay for it. And then you have to, say, well, is it useful? In terms of it being a money or a form of money. And certainly I think right now the dominant view in the way the Bitcoin network's been developed is like, no, it's not maybe an interesting, or it's not maybe great for money in terms of cash and transactions. It's not a good store of value, depending on how you look at it, because the price is extremely volatile. It's potentially expensive to transact. But there are lots of other projects and protocols that could solve, and even something called stable coins that keep a consistent value to the dollar. So we're still at such early days, I think, to say exactly like what the use case of the Bitcoin network or the currency fully will be. But right now, it definitely seems to be an interesting alternative asset for many corporations, for investors who, I read an article recently that seems to have gotten some of the gold market, a tiny bit, seems to be flowing into Bitcoin. So that 100,000 is a kind of victory, kind of like good marketing number to get behind. The Bitcoin community is really good at its messaging and its kind of meme ability. So that's kind of why I think 100K resonates.
Is there any attention given to kind of the aggregation of all of the cryptocurrencies and how much value is currently in that, or is that a little bit of an irrelevant metric?
No, the $1 trillion, I think it's a totally like the $1 trillion market capitalization. So kind of, which is not a great measure really, because these are not companies. They don't really have market caps, but we do refer to that language. And it's sort of loosely calculated as the trading price of a unit of a blockchain currency times its reported circulation amount. So that number hitting, Bitcoin hitting $1 trillion, that number for the entire, I'm gonna actually look that up while we're speaking. So yeah, and I think the other significance of the bigger numbers is that, this asset class, if you're thinking about it in terms of asset class, is too small for a lot of certain types of investors to actually put meaningful capital into the asset, which is so interesting. It's kind of, this has been grown up from the retail. It's grown up and gained this strength from retail and from small amounts. And for a long time, the markets have been too tiny for people to put very much money in them, and they didn't have the infrastructure. So there's a lot of talk about the first Bitcoin ETF being approved potentially at some point by the Securities and Exchange Commission, and that's just going to allow many more different types of investors to put a lot of capital into the space. So the whole market cap raising, like the price of a single Bitcoin, actually makes it easier for certain large buyers to enter the market. So it's also a sign of things maturing, because there's more, and that's also, I think what's spectacular about this asset class as well is its digital nature. It's really no limit to how much value it can absorb, unlike gold and silver physical, although we have derivatives, and I'm a culprit in that innovative space of derivative finance, the financialization of everything, where a lot of our investable assets are not necessarily limited in terms of where you can deploy capital in different interesting structures to generate money that generates money that just sort of generates money. But I think having these scarce virtual assets that are digital and highly divisible means they really can absorb quite a lot of money transfers. Oh, I was going to look up the total market cap. Hang on. So coinmarketcap.com is a website that will show you 9,208 different blockchain projects and a total market cap of $2.1 trillion. And Bitcoin itself is like 1.2 trillion. So Bitcoin itself as a network is a little over half of the entire space. And another interesting point on that is, I think it probably took like 11 years to hit 1 trillion and then like 3 months to double again. So you can see the kind of exponential growth of this space.
I have a question that occurred to me when you mentioned that bigger institutional investors are starting to get interested. And would you agree that when that starts to happen, perhaps it's also a sign that by entering that kind of maturity, it's also entering into a phase and maybe a permanent phase of therefore being inaccessible to normal people, or that, put another way, that it starts to mimic the issues in the world around money and investment that exacerbate the wealth gap over and over and over. And, my concern is, number one, there's already a hurdle and a barrier in just the concept of Bitcoin in particular, but digital asset classes for like normal people, even though, as you've said in this series, it's accessible to everybody, but it's not, because there's this like conceptual barrier, knowledge barrier, technology barrier. And then now, as the value goes up and up, and as people who do have larger pots of money to play with start to enter the field, that would be unstoppable.
Yeah, great observations. And I think the psychological barrier is huge. And I still stand by my statement that it is really accessible and it's different from a lot of other investment or kind of money opportunities, in that you can still put $20, $5 to work. You can own, and anyone can own this. Well, okay, I'm going to caveat that in a second, but it's the visibility and its digital nature. I think while the dollar value goes up, it's still available to be accumulated at set small dollar amounts. And it being more and more widely adopted potentially means that it's more useful. It will sustain its value in the future. So the psychological impact of seeing the price go up and people feeling like, oh, this has left the station, this is not for me, this is for Wall Street people, that's something I just would encourage folks to resist that mindset, because nothing has changed in terms of a person being able to download and connect their bank account. So that being said, there's lots of people who don't have a bank account to connect. And what has really changed is the sort of regulated nature of the market. And so the gatekeepers and the institutions that you have to go through in order to access the market, all this know your customer. So, dealing with money and money transfers is highly regulated. And so while the blockchain itself is an open, quote, free technology with no gatekeepers, really, practically speaking, our on and off ramps that connect us to the real world, are more and more controlled by very credentialed and regulated entities. A la Coinbase having its IPO. So I do see that on the one hand, that does de-risk the space quite a lot. It may mean that sort of the return, the volatility, sort of the upside potential might be flattening, although we still may be so early in where this goes that it may still be just as meaningful in 4 years to have bought today as it was today to have bought 4 years ago. I think we might see that for quite some time, as I think a long timeline of where this can go, particularly for some of the larger projects that probably have the network effects and the investment to sustain itself. So I totally agree with you that the maturing of the space presents a lot of challenges for access in some respects, but that I still also believe that there's an openness here and there's an opportunity here, that if you've got the mindset that you're not going to be intimidated, there's a lot to learn. There's a lot to kind of discover. And beyond actually just like holding Bitcoin or what have you and watching the number go up on your phone, is what I think is more interesting is kind of the governance model and some of other projects that, are Bitcoin-like, but are trying to solve particular problems, and what that technology or what that re-architecting of the way that we coordinate resources, the way that we can communicate across time and space, and by embedding value, sort of being able to program value in our activities, holds a lot of potential. A lot of this focus has been on the assets and their appreciation, and we've seen less deployment in the real world. We've seen less adoption and use cases outside of financial markets. So that's what I'm super interested in, that, and encouraging the interest in crypto assets and blockchain to go beyond kind of the speculative nature of the savings potential or the money. But what does it actually mean that an autonomous system, in a way, of people who don't know each other, who don't work for the same employer, have voluntarily associated themselves with a sort of set of rules and agree on what's true? And that's kind of, as a principle, really interesting. We've not had a technology that allowed us to do that across, just sort of globally on a real-time basis.
Thank you.
Any other comments? So speaking of NFTs, yeah, I feel like that's been a big distraction and unfortunate. I do. So what is an NFT? A non-fungible token is a type of digital asset that is unique in a way. So to the extent you have like Bitcoin network, 21 million Bitcoins divisible into Satoshis, each of those is what's called fungible. They're not actually identical, but principally speaking, technically speaking, they're identical. And that fungibility is a really important quality for a currency or for money. You don't want different variations because you won't know what's the value, that it's equivalent value. So fungibility is a really important concept in currency. However, having a digital sort of object that's entirely unique could be a really useful invention as well. So far, we've seen it, of course, deployed as collectibles and, on these certain networks for people who have lots of cryptocurrency like Ethereum, spending, huge amounts of that currency in dollar value as part of a frenzy, as part of a game. And there's been some spectacular headlines. Also, I recognize that it's resonated with artists the ability to maybe, cut out the middle person, and goes directly to your market and get that immediate return, to be able to program that asset. It's interesting, in the art world, the secondary market is when, a collector buys directly from an artist. And then when you hear these eye-popping numbers, like at auction, this art sold for $100,000 or $100 million, the original artist, if they're still alive with contemporary art, doesn't see a penny of that money. So the original artist may have sold that work out of their studio for like $30,000. And then 5 years later, collectors are the ones that get, the millions of dollars in the secondary market. And I think California at some point had tried to pass, I don't know the status of this, a kind of artist residual that would require the buyer to kick back payments to the original artist. But, this has been a kind of, I think something that many creatives and people in the space felt there's something just feels badly about that. So with non-fungible tokens, what's interesting is you can actually program that a percentage or royalty gets sent automatically back to the originator. So without anyone needing to press a button or without anyone needing to approve it from inception, that money is like been given instructions. And it's like every time you transfer to another wallet, give 10% of that value back to this original wallet. So I definitely am excited about how this non-fungible programmable money could be used to represent, unique things, intangible things. But, I think putting a tweet or a fart on the blockchain is kind of like not that interesting personally. And more importantly, distracting, because I've got so many people interested in NFTs, which at first I was excited about. And then I got like really bummed about, because I would prefer that people were as excited about even, let's say, just Bitcoin, and to learn the basics of like what is really happening. So if NFTs gets people interested, I'm happy about that, but it's not a get rich quick, like none of this stuff is. And learning about the space is, way more value add long term than speculating, I think, on an NFT, or even necessarily rushing to try and make an NFT without the proper advice. So I would also say that there are still cases when an NFT might be a regulated product. So this craze is not entirely different from the ICO craze from a couple of years ago. And depending on how the project is promoted, you could very well be an investment contract and not a kind of scarce commodity, which you're free to buy and sell. So definitely beware of people who are, if anyone's approaching you, particularly artists on the call, and they're like, hey, like I can help you make an NFT, and it'll just be this like easy way to make some money. I would, be definitely very sanguine about that, and not get too carried away. But it is very important shift that's happened, and particularly I think as we change our views about value and how we think about value and how we can exchange value, and the intangible, like NFTs to me feel like conceptual art. Like that was how I first, when I really saw, this is conceptual art. I really love contemporary art, and have been intrigued by people buying art performances, for example, or people buying sound work or other artworks that are sold that are not unique. But the art world has created its own rules to establish value, right? So a dealer that has a particular brand and has a particular business model and trust model can can sell a video artwork. For example, an artist makes a video. The video is obviously not unique, but the gallery can create a condition where, say, 10 editions of this video are created, and they're like packaged in a beautiful box, and maybe the artist like signs it, and the gallery prints a certificate and labels it with numbers. And, that video is maybe the exact same content that you could get on the artist's website, or you could copy paste. So why would a collector spend, $1 million or $500,000 for like an edition of 3 of a video that's not unique? It's not a painting, it's not scarce. Well, they'll do it because it's understood within a certain context to have that value, and the participants in that ecosystem will sustain its value, and there's trust in that work holding its value because it follows the rules of this kind of particular club. So I was like, okay, this is the same analogy with NFTs, where the platform matters, the audience of who the artist is or whoever is promoting it matters. It's not like just some magic happens because you sort of signed cryptographically signed something on any random blockchain and attached that to an image. So context definitely matters, but more and more we're living virtually, obviously, like we're doing right now. And our sense of space, where we can get a sense of community, where we can express our interests, our values, our personality, more and more there are online ways to do that. And so that's, I think, an interesting kind of social shift, and something not to be taken sort of, I think there's often with these new technologies, and there's quite a lot of like silliness obviously around it, which can make it easy to dismiss and be like that old man yelling at Bitcoin. Something that I don't really gravitate to is like NBA hot shots, like kind of, I don't know exactly even what that is, but like people paying for quick takes. But it's part of it. It's fun, and you have a shifting demographic, a young demographic that have been in many cases, in terms of some of the other artwork NFTs, they've got a lot of digital money and they're not maybe interested in selling it for dollars. And this is giving them something to do with, in a way of, kind of flexing a little bit.
Super interesting. It's sort of like the Michelangelo, like the like Mona Lisa, say, right, where you have a perfect copy, but people want the original, right? But even though it looks like absolutely identical. Right?
Yeah.
I have a question, I guess, it's riffing off a little bit of what Helene was asking, and how to think about Bitcoin and this world to make our world sort of more inclusive, more equitable. Like what are your thoughts there of how we can use this to help one another, help our community, help?
Yeah, I feel like it's the ultimate, it's kind of you can get out of it what you as an individual invest in it. And so I'm not sure I have a good response of how to necessarily help others in a collective way, other than maybe spreading your own experience. If you have an experience or you've developed your own conviction about any of this stuff, encouraging others not to be intimidated by it. I think that there are many projects that are tackling probably particular issues, the unbanked, or are designed around social dimensions. But I guess I don't have a great answer. I'd love anyone else's comments about.
Well, is there something around local currency, about how to use this in that realm?
Yeah, I mean, I think that on the one hand, that it's the technological potential, that it's digital, and we're more and more, remotely accessing things, and so if we can actually see in the future a local currency initiative, particularly in our region, that transcends kind of what I would call novelty status and really gains adoption, really becomes useful as a way of increasing the money supply, basically. I mean, providing like an additional liquidity for people, then I would say that the only possibility for something like that to work today would absolutely need to be kind of digital, or even more than digital, blockchain based, has enormous potential. So again, I mean, architecting that, I know that a bunch of us have been, thinking about and interested in this issue. So, that's still a nut to crack, like the actual, what could actually be implemented, and some regulatory hurdles or I should say hurdles, but just to navigate in creating a digital asset, especially in New York, where there's a particular state law around digital assets. Yeah, I mean, I guess, I come down on, I'm obviously super excited about the maybe safe haven potential of holding Bitcoin and other digital assets as a hedge against fiat monetary destruction. So I think that's actually really super powerful, that if, rent is going to double on you, if like bread is going to go up 20%, if you're saving in dollars, what's the purchase price of those dollars 5 years from now or 3 years from now? And if some percentage of that savings is held in cryptocurrency or Bitcoin, and that based on your own conviction from your own research, you decide that's right for you. I mean, to me, that's just like incredibly liberating. Like each individual person doesn't need to apply anywhere, doesn't need to kind of like consult with a bunch of people or get anyone's permission. That's a decision that every person can just make today and every day. But I think that I'm certainly not, I'm not at the point where I mean, many people in the space are much more like evangelistic, and they're like, do this, you should do this, you have to do this. That's not really my style. But it's obviously, what I think is one of the most powerful things that we can do going into the future, in terms of like, well, okay, if we're facing this uncertainty around the purchasing power of our currency or inflation, this potential savings technology, can make a difference.
I have something maybe to add to that, or so I've been involved in a number of projects recently around communities of practice. So at Good Work Institute, we're launching a program to support new communities of practice. And then one of them is the Hudson Valley Prosperity Network, which a number of people on this call are in that. Because I do think there's, like, Kianga, I totally agree with you that it's like a magic concept that like anybody could make that choice. And yet I think when it comes to money, and particularly long-term savings, that there's, I keep coming back to this analogy of like, it's an oil tanker that like can't change direction, because people have for generations sort of like had this concept of what that means. It's like real estate and your investment fund that you don't even know what they're investing in. And so I think there's like the potential to create opportunities for people to learn about this, these alternatives, but that it needs to be in community. It needs to be like small groups of people that get together on a regular basis and start to sort of hash out these new ideas, because it's almost like you have to deprogram yourself. And you certainly, if you're already in the space of investment, which is a tiny percentage of the population, you're used to this idea of analyzing risk and diversification of your portfolio. Like all these things are just natural. And I just don't think that people think that way. And they don't have time either. So I don't know, like, I think there's something in this potential of creating little study groups or little communities of practice or little pods in every town. It's almost like a
that's really
revolution gets seeded by these things.
that's
right?
that's happening, and that has happened everywhere in the world. It's happened online, so it's happened. And what you just described is absolutely the beginnings and I think the strength of why this asset class is what it is today. Not from people who looked at risk or came from the inside or had portfolios, but just total like YOLO, like kind of really gravitated to, I guess, some of the values around the early cypherpunks. And that, I think it's not an accurate picture to think that Bitcoin and crypto are only, kind of this certain set of people. That in fact, there are lots of folks from really different types of backgrounds and many, people you might think of as on certain margins in our society as well as around the world, who are like, wow, this is like a breath of fresh air, and resonate with its outsider nature and have, but definitely community. I mean, even myself, when I got involved, was like, hanging out in online forums and like watching YouTube videos and on Twitter. And even today, I don't know tons of people in meat space who are into this stuff. And so my sense of community is as well virtual. So I think what you're talking about though is bringing it into like also like our actual physical space but I think this has happened so organically, the adoption and the interest, and there's something about, I think, learning about, Bitcoin is this gateway drug to like, oh, well, what even is money, and what is, and even for myself, where I worked in, quote, finance for many, many years, I realized there were things about our monetary system, our banking, or even concepts of money that I just had never even understood or even knew existed. And none of that stuff was I taught in school or in the business world. And so I think it's actually really a culture and a space that inclines itself to the marginalized. And I still see that it's attracting people, but that it's definitely more of a tech savvy, in the sense that people are in like internet culture, internet kind of communities, picking up on this.
I want to do a shout out though to, if anybody's interested, we've been looking at local currency here in the Hudson Valley, Columbia County and the surrounding areas. And with sort of UBI as one of the bases for it. So if anybody here on the in the Zoom chat or otherwise are interested, please do get in touch, because that is something that we are seriously looking for, and looking actually for people to help run it as well. So if that's of interest, we're here.
Yeah, that sounds exciting, because I do think there's a really interesting overlap between localization and the idea of local resilience and actually not living virtually. I'm maybe just so sick of living virtually that I'm like ready for this to end. But I guess when I put on my optimistic glasses, I kind of see digital currency as inevitable, and as potentially democratizing wealth in a new way. And I don't know that the systems are yet in place to do that because of my perception is that the people involved, even the community you described, Kianga, feels like a community that is living a rarefied life, and that most people are not there. And yet, when we look at the numbers of, how much money is actually held by these huge investment funds holding onto people's retirements, it's just humongous. And if a small sliver of that were to be redirected, it would make a huge impact. So anyway, I
want to push back on. I want to push back a little bit on that, because in fact the mechanism is happening. There are cab drivers and dishwashers and homeboys and farmers and all kinds of people who've bought these crypto assets. And when you have a big company selling, or when you see the price going down, or someone's bought, so this wealth transfer that's taking place as the value of the asset goes up, I mean, people have paid off their student debt, they've bought homes, they've paid for emergency things. And you wouldn't necessarily see this, I guess, with how it's portrayed in the media, but I see it as I'm just always on Twitter and all these places, and I just see the ordinary people who are putting tiny amounts of money to work. And so in some ways it's kind of such a pure potential for this wealth, for this kind of distribution of wealth is happening. It's happening into this new asset class. And for anyone who's ballsy enough to grab some over the past 12 years, well, just like that, if they've sort of done it responsibly, I guess you could say, that wealth distribution has occurred. So I do think that there's tons of, I guess, ordinary people who are, really benefiting from this, and that is going to continue to spread, even with small amounts of money. And that I don't want that to be lost in thinking that we necessarily, that's not happening, or that there's something, we can do other things, but I really do see that is happening. And that's part of what makes me so excited about the space, is that it's a mechanism that people can really, a sovereignty, and people talk about kind of monetary sovereignty or what have you. And then you really, if you hold those private keys, if you transfer those assets off of an exchange, I see we're at time, that could be very, very empowering. And it could have this ripple effect where, wow, if you just saw your own ability to kind of participate in this, even in small numbers, could give you the confidence to do more, or, paying off that bill, or being able to just have that little extra. I think that's an important part of what's happening, and why it's a good thing, particularly for those who get involved early, because the big money is late and they're going to continue to be later. So we could just sort of ride the market cap as it goes up. But
that sounds like a great place to end. Kianga, amazing series. Thank you so much for really sharing your wealth of information, your enthusiasm. It's really been such a pleasure, and hoping this last, I guess it's a 3-part series, and hoping that you will come back for another series at the Spark of Hudson. And also wanted to thank Shanika here, who's done an awesome job kind of curating and helping out, and really, Shanika, thank you for all the work